Let's talk about the intersection between LLC and personal taxes. In other words, how does an LLC affect personal taxes? I'll tell you everything in today's conversation. I'm spilling all the beans, so I want you to stick around till the end. You will love it. I guarantee it. Welcome back, folks, to another edition of the Awesome Sorty Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous, if you were to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I want to talk to you about the intersection between LLC and personal taxes. In other words, we want to discuss the common denominator between those two concepts, LLC and personal taxes, and how does an LLC affect personal taxes. Let's first start with a single member LLC. So let's talk about filing taxes as a single member LLC. So if you run an LLC by yourself, you are called a single member LLC because it's only one person. And if you have not opted to file your taxes as a corporation, you file your federal income taxes as a sole proprietorship. This is important. This means what? It means that you report your income and expenses on your personal income tax return, your 1040. When you file as a sole proprietor, you pay taxes on your personal income tax rate. So if it's 21%, 25%, 30%, 18%, and whatnot. So to do this, you will first have to calculate and report your LLC's profits or losses using an IRS form called Schedule C. So this determines your taxable income. Very important to remember that. So to fill that out, you need an income statement as well as financial records and receipts for all the deductions you plan on making. Because the whole thing is, God forbid, if the IRS were to audit you, they want to have proof that, if you say I'm writing off like $1,000, $1,000 in this thing, that you can actually have evidence to back it up. Okay, so when we talk about financial records, we're speaking about not only your financial statements, your balance sheet, your income statement, your statement of cash flows, your owner's equity statement, but you also need to have the receipts. Okay, and you will also have to report and make Social Security and Medicare tax payments, for example, your self-employment taxes using Schedule SE. So when we talk about Social Security and Medicare taxes, those are called self-employment taxes, and you use Schedule SE. Now, how does a single member LLC pays income taxes? The IRS considers a single member LLC as a disregarded entity. In other words, the LLC is not separate from the owner for income tax purposes. For business purposes, for legal and business purposes, you might be segregated, but for tax purposes, you are one entity. So being a disregarded entity means that the LLC is taxed in the same way as a sole proprietorship would. That is, the information about the LLC's income and expenses and its net income is calculated by preparing the schedule that I just spoke to you about, Schedule C. So to start an LLC, by the way, though, you must register with the state where you want to do business by filing articles of organization or a similar application with the state. Let's talk about multi-member LLC. So if you are, let's say, if you are part of an LLC with multiple members, you use informational return Form 1065 to report the business income or loss to the IRS. Why is this an informational return? Because you don't pay taxes by filing Form 1065. This is just FYI to the IRS. The IRS wants to make sure that they have a clear understanding of how much the business made and how the profits or losses, for that matter, were distributed. And that distribution happens on something called Schedule K1. So an LLC prepares a Schedule K1 for each of its members. So Schedule K1s must be completed as part of Form 1065, but they are also used by members to report their share of the LLC's income and deductions on their personal tax returns. Okay, LLCs are considered pass-through or disregarded entities. I just explained that, meaning what? Their profits and losses, for that matter, passed through directly to the business owners. So owners of multi-member LLCs report their business profits and loss on Schedule E and report self-employment taxes using Schedule SE. Okay, so to file Form 1065, you need all of your LLC's important year-end financial statements, including a profit and loss statement that shows net income and revenues, a list of all the partnership's deductible business expenses, and a balance sheet at the beginning of the year as well as at the end of the year. Okay, so an LLC completes each member's Schedule K1 as part of Form 1065, which basically identifies each partner's share of the profit or losses over the course of the reporting period. And so if you are a member of the LLC, in other words, you are one of a multi-member LLC, you need to report your Schedule A1. You need to actually attach it to your 1040. Very important. And so how a multiple member LLC pays income taxes. An LLC that has more than one member typically pays income tax as a partnership. The partnership itself does not pay taxes directly to the IRS, aka the whole thing about informational return. The individual partners pay tax based on their share of ownership in the partnership. So reporting your income as an LLC member has several steps. The partnership files an information return with the IRS on Form 1065. You'll receive your Schedule K1. You must transfer Schedule K1 information to Schedule E, supplemental income. So the Schedule K1 you'll receive from your LLC breaks down your income into different types, and each type of income goes into a specific place on Schedule E. And you want to include the income from your Schedule E in the right place on your Form 1040 or 1040 SR. One thing I need to say though, the IRS considers income from rental real estate, including Airbnb and Vrbo, as passive income. So losses from normal business activity they're not limited, but losses from passive income are limited if you do not participate in the business, so you must report this income separately. Now let's talk about your tax strategies. First of all, you need to understand the benefits of an LLC. Okay, so one of the main benefits here is the pass-through. So when you actually compare and contrast that with a corporation where you have direct taxation, where you have double taxation for that matter, for an LLC you have pass-through, so you have no taxation at all. So this describes the way the LLC's earnings can be passed straight through to the owner or owners without having to pay corporate federal income taxes. Okay, sole proprietorships and partnerships also pay taxes as pass-through entities. So these businesses pay no federal income taxes themselves. This is important now. We also love the flexibility of an LLC, the tax flexibility. In other words, an important feature that when you read the Internal Revenue Code, an important feature that we love here is that as an LLC, you can allow your member to choose the way your business will be taxed. So the members can choose to be taxed as a sole proprietor, a partnership, an S corporation, or a C corporation. By the way, if you want to be taxed as a sole proprietorship, you can only be one member. This only applies to single member LLCs. But once you have multi-member LLCs, you can actually elect, that's the right word here, you can elect to be taxed as a partnership, an S corporation, or a C corporation. And you can choose how you will be taxed by filing IRS Form 8832. If you don't file anything, by default, as a single member LLC, you are taxed as a sole proprietorship. Okay, there are some limitations on the aforementioned choices. We have actually covered this on other shows. Really important. But one thing I want to say here is that it really depends on your situation. So let's quickly recap here. If you're a sole proprietorship, you prepare Schedule C and you file taxes personally. You report income and losses, income and deductions on your 1040. If you're an S corporation, you have to file Form 1120S, okay, but you do not pay corporate taxes on the income, okay. If you're a C corporation, you file 1120, but this is a full taxes, so you basically have to pay taxes twice. If you're in a multi-owner partnership, the LLC will file a Form 1065 partnership return. Each owner will pay taxes according to his or her share of the profits or losses, reporting this on Form 1040 and a Schedule K1. So those are the tax advantages of LLCs. Let's talk about the tax limits because, nothing is perfect and the Internal Revenue Code changes all the time. So you have to adapt, you have to adjust. So it's important to keep in mind that organizing as an LLC doesn't mean you won't pay any taxes at all. You will pay taxes, okay? You will still have to pay taxes on the income that is generated by the LLC, either at your ordinary individual tax rates or something else, depending on your election. Okay, so LLCs, depending on how you set them up, may not have to pay business taxes at first. But one thing that you need to think about, you need to think about what is important for you. What are you trying to avoid or foster in your business strategy? Because there are some tax considerations that you need to think about before setting up your LLC. For example, double taxation. Is that important for you or not important? Because a C corporation, even though it has double taxation, does have some benefits operationally and in terms of fundraising from investors that are profitable, that are conducive to a C corporation. So are you trying to avoid double taxation or you're trying to avoid something else? Think about the tax rates. So depending on your tax treatment for your LLC, your tax rate might fluctuate. For example, if your business is considered to be a disregarded entity, then those tax obligations will fall to you. And if you happen to be in a higher rate tax bracket, let's say 33% or 35%, you will have to pay more taxes on that income as compared to what if you were just a C corporation where you are only paying 21%. So those are considerations you have to think. What about capital expenditures? Those are important. So with an LLC, there is a possibility of you being able to claim a deduction on your capital expenditures for purchases of equipment that the business uses. Same thing goes with if you choose a C corporation, but you have to think about how those capital expenditures will affect your income statements and also your balance sheet. And also, let's talk about business expense deductions. Some tax treatments will benefit you more than others when it comes to deducting business expenses. So the type of business expenses that you pay the most will depend on which tax treatment is the best. Let me give you an example. If you opt for a C corporation is there are typically more beneficial for medical expenses. Okay, but an S corporation, LLC are great for service sectors. Anything about service where you provide services, and LLC is a lot better. So those are little things you really need to think about. If you have questions, please feel free to ask below. We'll answer you or send us an email. Not a problem. Let's talk about the common denominator here when we speak about LLC and personal taxes. And it's really important to have to see the nexus uniting those two. Can you file an LLC with personal taxes? Now, the thing is that the IRS has not created a tax return for LLCs yet. The income or loss that is generated by an LLC is subject to taxation on a federal level. However, it is required by the government to use a partnership, personal, or corporate income tax return to report its earnings and losses. If corporate treatment is received, the members of the LLC do not need to report any income on their tax returns. One thing I want to say here is that when we talk about LLCs, you have different ways you can be taxed as a partnership. Okay, if the LLC is treated as a partnership when it comes to federal income taxes, all members must report their financial gains and losses of the business on their individual tax returns. Now, don't forget passive activity losses. I said this before, you got to be actively involved in the business to actually qualify for the deduction. Otherwise, if you're doing an Airbnb type of business, your deductions will be limited. Very important. And the thing is that people, we have a lot of viewers who they actually asked us, why does the IRS disregard the LLC entity? Well, they do it for several reasons, but let's just simplify a complex matter. The IRS will disregard the LLC if only a sole member exists. That situation will require you to report all expenses and income of the LLC on your individual tax return. And the reason why the IRS does this is because they think, for tax purposes, a single member LLC is not really different from the individual. In other words, if something were to happen to you personally, let's say you get, God forbid you got sick or you got involved in an accident, whatever, your business is at risk. So your whole economic activity, your whole economic process will stop because something happens to you personally. So regardless of whatever legal protection or legal structure you have, the IRS still thinks of you as the IRS disregards your entity and actually, quote unquote, confuses your individual life with your business life. This is why they're just doing that, okay? And one thing I want to say also is that there are some rules that when it comes to net operating loss, so the null, and we have covered nulls on other shows. So if you're interested in learning more about nulls, please let us know and we'll certainly direct you to that specific video. Let's talk about tax payments. And this is an important topic that folks are interested in. And so how does a limited liability company pay income tax? Now, you need to understand, an LLC basically is recognized by all states, okay? All 50 states recognize the LLC form of business organization. So forming an LLC provides limited liability protection for owners. They're called members, okay, who are taxed at their personal tax rates. I just explained that. Now, how a limited liability company pays income tax depends on whether the LLC has one member or several members, and whether the LLC elects to be treated as a different business form for tax purposes. So, let's talk about income tax for LLCs classified as corporations or S corporations. You can choose, if you're an LLC, if you have an LLC, you can choose to be taxed as a corporation or S corporation. So usually, you will need to have a Form 8832 entity classification election to make the change, okay? And so how do you actually pay taxes? Well, you pay taxes depending on your, so if you pay taxes at the personal level, then you can, if you have a refund or if you owe, you will pay through the normal channels. If you're a business, the IRS has a platform on its website whereby you can pay your taxes. And so it's important to remember that if all are part of your income as an LLC member, the thing is, if you derive income from your LLC, you need to use Schedule E. And if the LLC has to do with real estate income, you need to use Schedule E to report supplemental income for Form 1040 instead of a Schedule C. Okay, and now what about LLC owners and self-employment tax? Well, you have to pay self-employment tax. This is important, and so this is a 15.3%, and you need to complete Schedule SE to calculate how much you owe based on your business net income. And also, don't forget state income taxes. Depending on your state, you might have to pay income taxes at the LLC level, okay? And you will need to actually, the thing here is that some states do not charge you anything, they don't levy a tax while others do. For instance, California does levy a hefty, quote unquote, hefty tax on the LLCs, but again, it is what it is. And one thing you need to understand here is that the best way to do this, you want to contact your state revenue authorities to learn more about the regulations in your specific states. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another session of the Awesome Sweaty Kiwi Show. We are still having a conversation today about LLC and personal taxes. We're trying to find a common denominator between those two constructs, those two fiscal constructs. And so let's talk about, people have asked us, do you need to file a tax return for an LLC with no activity? This is an important thing that people need to understand. Now, even if your LLC did not do any business last year, you may still have to file a federal tax return. Sometimes an LLC has a year with no business activity. Let's say, for example, a newly formed LLC might not have started doing business yet, or an older LLC might have become inactive without being formally dissolved. But even though an inactive LLC has no income or expenses for a year, it might still be required to file a federal income tax return. So LLC tax filing requirements depend on the way the LLC is taxed. I explained this before, right? So an LLC may be disregarded as an entity for tax purposes, or it may be taxed as a partnership or a corporation. So the thing here is that the responsibilities actually will lie at the individual level or at the business level. So if an LLC only has one owner, a single member LLC, then that member will have to pay income taxes, will have to file a return, because if they have had activities in their personal life, they need to pay income taxes. And the same applies for LLC with two or more members, because the need to file at Form 1065 is, it actually stems from the fact that those owners need to report their Schedule K1 information on their personal tax return. Okay, and so whether you are an LLC partnership, or you are filing as a C corp, or as an S corp, again, the whole thing is no activity tax means that you are still filing tax returns, because the IRS wants to know what's happening at the business level, but also what's happening. They also want to know how what is happening at the business level affects what's happening in your personal financial life. The best, if you don't want to keep filing tax returns over and over and over, the best thing is to dissolve. You want to dissolve the business if it has been lethargic for a long time. Let's quickly summarize everything. Because I really want to make sure that we have covered a lot of ground into this conversation. And so what is it really, what is really the takeaway here? If you were to close your eyes and somebody were to ask you, what have you taken away from this video? Well, the thing here is that when you have an LLC, there are a few things that you can actually benefit from that sort of legal and tax structure. You can actually, an LLC could cut your tax bill if you are currently subject to double taxation. In other words, you're a corporation, you're a C corp, and you're trying to get away from that. So you can actually transition from a C corp to an LLC. If you are paying lots in self-employment tax, then an LLC could cut your tax bill. It's important. And if you need liability protection, you can also choose the LLC route. Like C corporations and S corporations, LLCs give their owners limited liability. In other words, you're preserving your personal assets. Very important. That means what? It means that if the LLC ever goes under or gets sued, your personal assets are off limits. If your LLC is using an owner's personal bank account, though, their personal funds can still be seized. That's why we really want to make sure that you segregate your personal affairs from your business's affairs. Okay, and so you want to make sure your personal assets are safe by opening a business bank account. If you are also focused on growth, you can actually go for the LLC route. Okay, if you are a new and growing business and you intend to reinvest most of your profits back into the business, electing to be taxed as a C corporation could lower your tax bill. That's because C corporations pay a tax rate that is often lower than individual tax rates. So this is important, okay? So bottom line is what? Knowing how an LLC affects personal taxes is essential for a business owner. A limited liability company is one of the most regular kinds of business entities that you can choose when you incorporate. So when you set up an LLC, you have many advantages, and make sure that you do things right. We have actually covered on another show how to set up an LLC. There are a lot of services out there, from Zen Business to LegalZoom to you have from Rocket Lawyer. You have a lot of players out there who can help you set up your business. Make sure that you abide by state laws, that you have articles of our organization. But this topic goes beyond the purview of this show. Thank you so much for your attention. I really appreciate it. I was just talking to you today about the intersection of LLC and personal taxes. So we spoke about single member LLC, multi-member LLC, the tax strategy you need to have, your LLC and personal taxes, how those two things work together, your tax payments, if there is a no activity tax, how the whole thing works, and I give you a nice summary at the end. Thank you so much for your attention. I really appreciate it. God bless you. I will see you next time. But until then, remember, stay marvelous.